So now on weekly time frame, we're looking for weekly break of structure, and what we see here is price updating here, supply October 2023, sorry, December 2023, and price came back to after break of that structure, we tested it here, and then we had a break of a demand floor and came back to retest a broken demand floor, making it a supply roof, and return again to retest again as a supply roof. It's within the zone and ultimately return again as final retest to a broken previous demand floor. So on technical, Solana is still under supply attack. It's still under supply attack. It hasn't really broken back to return to the demand phase. But however, it's promising. It is very, very much promising. The window is promising on structure. What I see is that in the future, it could manage to outswing and return back to its path to buy. And I would like to extend this structure so that it will accommodate the November end of this year structure. I don't want it to be cut short, so we can always leave it for reference. So we'll be watching this structure. Anytime Solana comes here, it's a sell. Anytime you see Solana on this blue line, just bear in mind that it's going to sell from here. The reason it's going to sell is that every time it comes here, it will way much break of a previous high. Let's say price returns here is 313K. If price returns here 340, if price returns here 375. But however, if it breaks out of the structure, then you expect that the next area of resistance is going to be at this roof, which is technically the end of the cycle. So if we break out from here and we return here, that's about 370 in a short time. So that could become the new trading zone. The market begin to oscillate within this range. So this is what we have, and I want to keep this as zones that are forbidden, so that whenever you see them, you know that price is setting itself up for a potential bearish opportunity. So we want to keep that way, and we have had the black line is a breakout from the descending trend line, indicating that from the downside, Selena is no longer interested to go down. So this is what we see from the downside. So on technical, we could potentially see buy positions on this floor. Then we also want to extend this for reference purpose, so that anytime we see price on this floor, it becomes a new demand floor. So on this floor, we expect that anytime price comes here, it's most likely we will be on trigger for a buy opportunity. And we have already looked it up on daily. You can see it on daily, and the chart is clean. And what you will try to do is to try to avoid the daily chart. We only have one daily chart trend line here on weekly time frame, cutting the body of a weekly candle four times, cutting the body of a daily candle four times. It's not a good sign. It's really not a good sign. We cut the body of a candle on March. We cut the body of a candle again on Wednesday. Okay, we cut the bottle on Tuesday, cut on Wednesday, and cut on Thursday. This is not good. This is not good. This is not good. This is not good. This is not part of our strategy. It's not looking good. So the best thing for us at the moment is to move our line away from that structure. That structure was a different trend angle, was a different trend strategy, was a different trend strategy. So we want to place our trend lines at the areas where market is playing along with the sentiment of the structure. My structure have sentiment. The sentiment of my structure is that it must be clean. If it's not clean, then it's not for us. Now you see something like this again. We cut the body of a daily candle. Yes, it returned here as a demand cut again. I do not like it, so I have to move it away. I have to move it away. At the end, I will explain something. We want to remain in a clean chart. If you remain in a clean chart, it's either you trade or you forget about it. That's what a clean chart will teach you. It's either your chart is clean or you forget about it. If your chart is not clean, definitely it's going to do you something that is very dirty. It's just like dealing with somebody who is very bad. Dealing with a bad person is actually going to do you something that you don't like. It's actually going to do that to you. That's what data structure means. Anytime you are dealing with a data structure, just bear in mind that the structure is going to do you bad. It's going to really do you bad in a way that you will not like it. So this is out of experience I'm speaking. I'm not speaking because I just want to speak, but I'm telling you from experience. So we want to be in a clean chart only. We really want to be in a clean. It doesn't matter the time frame. If it only takes us only October and 2025, I mean from October 2024 and February 2025, if all it takes us to be in a clean chart, let's remain in a clean chart and forget dirty chart. Let's just do that because dirty chart has never brought any good sign, has never brought any comfortable, any win. It will never give you any win for sure. But the reason we may want to go back to the weekly time frame to hold that weekly break and close is now we're going to do that in a different chart where we hold that weekly break and close active, believing that if price returns there, we want to see if the weekly structure will be respected. But for now, daily is giving us what we need. So let us stay on daily. You see, after price forming a W structure here and went up, and when we had a break of structure here and price returned here on Tuesday and it's respecting that structure. So let's stay to it. Let's stay on clean structure. Let's stay only on clean structure and forget something that is unclean because what it will do will not be different from what it is. So now we have, I think we have one more ascending trend line before we call it a quit. Let's look at it on weekly again, and also draw it on our line chart and see if there is a trend. I think there is a trend to the market, and let's see. That's the trend. That is the trend. That's the trend. That's the trend. Got that on a weekly. That's a weekly time frame trend. So you can see it is clean, and that is why I want to stick to it. If it's not clean, there is nothing we want to do with a structure that is not clean. Our strategy and over time, what we've learned is to try to avoid a structure that is not clean. I know you want to trade, you want to place bets, you want to put a buy, you want to put a sell. But when a structure is not clean, it's technically telling you something. It is going to do you something that is not good. I am speaking from experience. Dealing with dirty structure in the past have never given a good result. So if you want a fantastic result in your trade, try and make sure that you are in a clean chart. Your structure must be clean. When I say clean, we are looking for if demand is broken, it should return as a supply. If supply is broken, it should return as a demand. It cannot be going jumping up and down, jumping up, breaking the body of a candle. The body of a candle, breaking it with a line. You can break the wick, but leave the body. Allow the body to rest. Allow it. Look at our chart here. We have minimal body cuts. In fact, there is none. From this chart, I try to make sure that it's as clean as possible. I didn't cut the body of any candle. I only cut the wicks. I will not discuss that for now. I will leave that one. I will not discuss the reason for that. It's a trade secret. I won't talk about it, but I've just said what I want to say. Do not cut the body of a candle. Cut the wicks, leave the body. And with time, as time goes on, if you practice it over a period of time, you will know why I've said that. So this is what we have, and it it is what it is, and it is what it is. It is what it is. This is the highest we can stop. We can't go more than this. This is the highest we can stop. So if Sol manages to return back here again, which I think is very unlikely, is going down now on the bearish. It's going to need a very strong liquidity for it to return back to this position. For it to return here, it's going to need a whole lot of money. If there is no money, then forget about it. You can't do magic at this level. You can't do magic at this level to break this level. So as long as I respected this structure on daily, is gone. So what is it going to do next? It might technically come back to retest the descending trend line breakout. Descending trend line breakout is very evident and clean, and And as we can see the structure looking at us, the way we are looking at it, we have price updating here by way of a double top and a sold down, sold down. And when price return again on the same double top structure and it's sold down and price return again, always remember the second leg. So sometimes you have to be patient. When market is going up and hits a resistance, first leg, second leg, if you enter first leg sell, it will come back and take your profit of sell and sell finally. So most times, even if you sell in the first leg of a resistance touch, try as much as possible to take minimal profit and come out of it and wait for the second activation leg. The second activation leg is what makes the M structure complete. What I mean is this: if price want to sell, and this is let's just say this is a supply roof, a supply roof that market want to sell. Now, what it will do is it will first of all it will come here like this. If it comes here, it will go down, then come back again, then before final drawdown. So if you just come here and you keep that and most times what market do is that the strategy is sell in the break of a previous high. So if you establish here now at a resistance structure and the market returns and it wants to sell, most times what it does, let me show you what it does. What market does most times is to it will come here. This is the first leg into a resistance zone, the first leg into a resistance zone, and the market drops, then it goes back again, break of that previous high, then begin to sell, thereby take you out of your stop loss. And you see the market actually sold. And most times when these things happen, you look down on a lower time frame. If you look down on a lower time frame, you will find out there is an ascending trend line accompanying it. That is why price have to return again to retest it. And when it comes back, it dips itself again into the roof of the ascending trend line while maintaining this resistance structure. It's still maintaining it. So you begin to see long wicks, body of a candle close, sell down. So it is important that, or if you know you don't have strength to face any trauma in this market, you wait for the neckline to be broken. So what is the neckline? Now, after market make that second touch, you want a breakout of this structure, then you can enter your sell order from this level and outright sell. Now you have seen that the market has approached a resistance zone. I've gone to create an M structure. You are waiting for the completion of the M leg. Once the completion of the M leg, you want a breakout of the neckline, then you want to ride from this zone, you want to ride down. But you are going to miss the beauty of the trend. You're going to miss the beauty of the trade. You're going to miss a whole lot from it. So the best thing for you is to, after you calculate your area of resistance, you wait for the second leg. On that second leg, get in on that second leg. The reason is because market is a little bit diabolical. It might come here and return back. And if it comes down here and it happens to be another demand floor on a descending demand floor on this area, it might respect it and go back. This is how the market work. It might respect it and simply go back. So that your sell order here, it will turn you to a buyer. So this is what we see over a period of time, and we have been seeing this market. We are OGs in this game, and we're seeing it. So let's see. Let's make some critical adjustment to this our chart. I do not like this. This is technically dirty for me. It's technically dirty. So let us see if we're gonna end up in something clean. That mid-term ascending trend line, our mid-term ascending trend line. Now we've got a mid-term ascending trend line that is clean. We have to make it as clean as possible. If it's not clean, please try as much as possible to forget about it. It means the market is not set. Those who are trading this market are trading clean structure. They're never getting into a gambling structure. The problem with a lot of traders is that they gamble a lot. Everything you see, you want to trade it. Allow your structure to be clean. Allow your structure to set properly. Allow it. If you allow it, it will come to you.